Hello, welcome everybody. Thanks for joining us today. We're super excited to have Nick here, and you're going to find out why. And we have, I don't want to put it on the recording, not that it's a problem, but our nexus of connectivity is somebody who I've known for a long time is also involved in the company. And so we're super happy to have Nick and talk about what's happening in his world. And also, being that we had a really nice fight the other night, I'm sure you want to talk about that as well. So, yeah,
Yeah, there's some feelings there.
yeah, I bet. Yeah, the public seems to be all ramped up about things. So, and of course, people are doing dramatic things, and it's always sort of fodder for entertainment, if nothing else, right?
That's right. It's
Yeah,
entertainment at the end of the day.
that for sure. So, thanks for being here. Really appreciate it. I've had a chance to chat with you a few times, and then look under the hood a little bit, and so. And just full disclosure, I'm actually on the cap table here somewhere, right?
Yep, that's
Yep.
true.
So super happy to have done that as well, and thank you for that. So let's jump in, Nick, and give a little background on your history, bio, that sort of thing, and how you got here.
Sure, I appreciate it. Well, thanks again for having me. I think this is fantastic.
You bet.
I guess going back for a long ways, I think it's important because obviously this is a sports asset class fund. Myself, I'm a former athlete. I played college football, tore the ACL, killed the dream, didn't know what I was going to do with myself, pity me, whatever. And then went on after that to have a very good career in MMA. During that time and kind of transitioning out, I actually continued with my degree. And so I'm a physiologist by trade. And, I did that because I knew that I wasn't going to get punched in the face forever. You can't do that. That's not a lifelong career. And so for me, it's how to really transition out of sport in a meaningful way and help others. And so I really found my niche in physiology, working with pro teams. And during that time, in fact, actually, most recently, I was team physiologist for the Avalanche, the Nuggets, and the Rapids. So I am Denver based. After that period, I really started to look at, well, how do we commercialize this? There's got to be a way to spread this to the masses because I think people don't understand how much pro athletes get exposed to some of the latest, greatest tech, some metabolism pieces, things that I guess we'll call the mere mortal groups of all of us don't get to touch. And so I kind of set on the track of commercialization. I naturally gravitated a little bit more towards medicine and working with orthopedic surgeons because they're a very innovative group overall. And so from there, I started working kind of on this connection point between, or I would say just in general, medicine, sports, and real estate. And real estate hospitality kind of stemming from medicine. And so kind of went on to do multiple projects. I did things as small as 10,000 square foot to 130,000 square foot projects, $33 million builds, some pretty heavy stuff overseeing service lines that were etching towards over $1 billion annually in revenue and then continued on to form SPVs, went on to be an LP in funds. I also went into the founder's seat. I openly admit and tell people I've had a good exit, but I've also had to BK a company as well. So you learn a lot more from your failures than you do your
For
successes. But I think
sure.
that battle,
Contrast is important.
that's right. And yeah, I mean, you need to be battle tested too. If somebody's going to tell you, hey, here's what you need to do for your company, and they've only exited once, I don't need winning lotto ticket numbers, right?
Yeah.
Like, I want to know the way to properly execute business and protect the principal. And so, definitely had that battle tested side of it. And so, from then on, again, kind of went with SPVs, angel investor, LP in funds to ultimately being a GP in funds. And what got us to this point, interestingly enough, is I was running a nonprofit studio out of Fargo, North Dakota, of all places. And my partner and I really wanted to get capital to the upper Midwest and help companies at the 0 to 1 phase and not put LP's money at risk. So we did it as a nonprofit. But we had a bunch of other bolt on venture capital funds that we were part of. And so, during this time, I met my now partner in Champion Venture Partners, Marcus Colston. So Marcus, he had a good career in the NFL. He'd kill me if I misspoke on this, but somewhere around 10, 11 years in the NFL for the New Orleans Saints. He and I worked together on a timing gates company for the NHL. And so we came together on the sports tech company, really started comparing notes. And interestingly enough, we had the exact same mission, what we're trying to do. First of all, kind of taking things to an alts for all type mentality. and really kind of taking this out to the masses and getting retail investors involved. But then we also looked at this and said, we have to do it at the heart of what's there for an athlete. And again, most people are shocked to find out athletes have been left out of the ownership conversation for a very long time.
Yeah.
And so, doing meaningful ownership in sport is a big deal. They give their lives, their bodies for the sport, but yet there's not meaningful ownership options. They get treated like a mascot, right? And so we said, all right, how do we cater to the athlete population? Well, there's a lot of hurdles there to make that happen. So to cater to the athlete population, the average time in sport is only 2.5 years. So we know we couldn't do a traditional 2 and 20 fund model. We had to get more creative. We couldn't lock up the capital for 5 to 10 years. It doesn't work. There's malalignment from the beginning when they need more liquidity options. So then number two, we started looking at, all right, how do we provide more liquidity options? How do we really make this thing happen? And so then from there, we're like, well, if we need more liquidity options, this has to be a much lower risk asset class. And obviously, we're operators in sport. We know the business of sport, but then we, in particular, want to target the growth stage of sports asset class. And then finally, last thing is when we're looking at the athlete investor, they start as an accredited investor. And then sadly, you see it where they sign a $10 million contract, they get injured, that goes away really quickly. And
Yeah.
now, if you do the math on it, they're left with a very small piece of the pie and you fade to this non-accredited status. And so it dawned on us, we're like, why would we not treat that person the same way as an LP, as like, a mother of 3 kids who's going to the baseball field every day. She's buying a $500 baseball bat, but yet she's paying into all this, but yet not owning in sport. Like, why not make it so that she can own part of that bat that she's getting to those kids? And so that's why we made it basically investor like the accredited investor and retail investor. And so I'll pause here in a second, but that's literally how we came up with what Champion Venture Partners is today and how we launched this and kind of our ethos of where we're aiming.
Do you think that most athletes, and this may not be a fair question, but based on what you said, see themselves as the gladiator in the Colosseum and that they don't get to participate with the in the king's court? I mean, is it really that common that people feel that way?
It is. I mean, athletes feel left out and they feel like a lot of their opportunities are driven from two poles. Either somebody who is basically commanding them to be on the field or in the ownership group where they're not able to participate there, or the polar opposite side of it of, you know, they get seen as the wallet. And so their best friends, nephews, former roommates starting an AI company in their basement, it's never going to get off the ground, but that's the high risk deals that they're seeing and asking to put their money into.
Yeah, their posse is not exactly helping many oftentimes.
It's
Yeah,
100% right.
yeah. So it's we've seen so many of these stories, and it's heartbreaking in many cases where people have been making a ton of money, had no basis of understanding about money. It's not their fault, right? Uh, they probably couldn't have been the athlete that they were if they were focusing on something other than being an athlete, right?
Right.
And so the 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 idea of crowdfunding may have come into your head, right? And there's
It did.
barriers to that. What were the pushbacks of going down that route?
I think our goals to make this CVP as a whole, we wanted to open up a fund structure that could be the largest retail investor friendly structure in the country. And so with a Reg CF round, there's so many different I guess, guidelines and way to bring that in on the cap table that it's really difficult to kind of marry up the differences between the accredited investor and the non-accredited investor. Because as you can imagine, whenever you're doing a fundraising round, as it should be, the SEC wants everyone to be treated the same. And so when you do that, you're really pigeonholing yourself to a very small sized fund or one that doesn't have the liquidity options that we need to go with a CF raise.
Yeah. So uh, just back to sentiment for it's really uh, uh, the optimism in the marketplace. And I want to liken it to what you see not only in global football, soccer. There are people that are so passionate about that globally, but in the US, these stadiums are full. College football, professional football, I mean, they are just massively full. And when we first spoke, I I was thinking, boy, wouldn't it be cool to be a passionate fan and clicking a coupon away and participating in the money that the vendors are making at the stadiums and all that, just go down the list. Is that essentially what you're trying to do?
It's 100% what we have constructed. So we're the first people to do that, which is great, but obviously we're blazing a trail, so there's a lot of nuances to it as well. Everybody has, from a BlackRock to, fill in the blank. People can pay to play and they go after teams, and the check sizes, are anywhere from, I think the most recent one is like 1 million plus, which is music to a lot of people's ears. But prior to that, it was 10 million plus, 50 million, 100 million to even play, in the right area right away, to even, I guess, pay to play and be in the door. But the other kicker that's so interesting is what you just said. And most people don't realize this. Most people automatically think sports asset class. They think teams. They think the big five. They think MLS, MLB, NFL, NHL, right? They want to go to the big stadiums like, well, I can't write a check. I'm not going to write a $500 million check to play in a minority position in a big team. I can't write a $5 billion check to buy up some of the Mavericks, right? Like that's the common thought. And that's also the barrier. But to your point, how cool is it to say, I own some of the digital ticketing, the other pieces? The reason why there's so much excitement in the ecosystem right now is sports as an asset class has outperformed the markets for the last 60 years. And it's relatively stable because, like you said, people are in the seats. Even during COVID, people weren't physically in the seats, but the memorabilia sales went through the roof during that period.
That's
So
good to
it's this
hear.
thing
Yeah.
that
Yeah.
it's the thing that unites us and people pay attention to. So even if discretionary income is at a low in a recession, people still buy into sport. They still are participating. And so for us, we pay attention to the entire sports asset value chain. So teams and leagues, cool, vanity item, not where we're aiming. I want to look at the emerging teams and leagues, the ticketing, the digital wallet that supports that, what happens to the in-seat food and bev, all the way down to the CPG products and things that are sold in the stores. So think about, we have some that are equipment companies. We have some in our that we're looking at that are, this one seems like a bizarre one, but so obvious. Um, it's the faucets and the services inside of stadiums. Seems unsexy, but it prints money. Like those are the things that we're looking at and pursuing.
Yeah, I always thought that I wouldn't want to be in the stadium seating business, meaning the actual physical seats in the stadium. And this is probably folly thinking because you'd have to bend over backwards to get that trade. You won the bid and there's no recurring revenue, right? And so how much money, I mean, they probably make millions, but it just seemed like, which uh, morphs into my next question is that I think the general populace thinks that everybody's got that figured out, even if Nick could figure out how to buy companies or buy into companies that do all this stuff. They, been doing this for so long, they've squeezed every penny out. There's really not any opportunity. Like people think they've got it all figured out, and often they don't, right?
Nope, not at all. Not at all. And I
Yeah.
mean, you'd be surprised at how some of those, even like ticketing, it's not even the ticketing, but it's the recurring transactions of the wallet itself. So you can drill this down to the smallest infinitesimal spot of sports tech where it's massively scalable. And it's ubiquitous across other things as well. So think about you're right. So ticketing may not be not necessarily for just a team, but think about the economics of that stadium. So think of it if you're going to hyper target a local market, look at what's happening for concerts, events. Like, I mean, it just keeps going. It's a never ending pool.
Yeah. So let's talk a little bit about that. Is the deal flow uh, overwhelming? Is it hard to find? Is it, just like a lot of other venture type investments that you really got to look at, you know, 200 things to pick two?
You know, so the deal flow is overwhelming. I will say that. And I really don't mean this to come across egotistical, but we have a very strong Rolodex of operators and people that have been in the business of sport on our team. And so because of that, we truly believe that we see the top 1% of deal flow. So we're getting access to things very early and we're getting access to things that are at that growth inflection point where they're acquiring a competitor and things under the radar that we can then jump into. So people are coming to us for our operational expertise, and they're coming to us because of what we can do to bring exposure for them in the market. And so the deal flow, we're well over 100 a month that we see coming in. I would say the hardest thing to analyze is revenue quality. And I think luckily, again, kind of being the drum of our team, the people that surround me on this team are wildly successful in the business of sports. So they can know revenue quality quickly. But for instance, you'll get somebody who will go through the first filter. So we're growth stage, right? So we're looking for profitability. We're looking for product market fit. We're looking for stability and growth on the NAV of at least 25+% year over year. So we want to see a trajectory. And what we're seeing is people will say, "Yep, we're making $2 million on our bottom line. We're 2 years in. Here's what it looks like." It's like, wow, this is unbelievable. Then when you get under the hood, you find out that there are people in this ecosystem where their friend is the GM of, let's say, the Golden State Warriors. So yeah, they got a contract, but if that
And then he
contract goes
leaves.
away,
Then he leaves. Yeah.
exactly. So
Yeah.
you really got to analyze the revenue quality, and you have to know the business of sport and who the players are to command this ecosystem. Otherwise, if you're just like, yeah, like this tech looks good, this looks good, it's a very quick death of a venture capital firm because you could completely be birdshotting into sports that look sexy that have no place in the market at all.
Yeah. So can you share a couple examples of things that you found that fit?
Yeah. So I kind of alluded to one originally. We're looking at one that is kind of the plumbing and services inside of stadiums. Right now, they came to us because they were literally hemorrhaging in operations. The gentleman who founded the company is like, "Look, I just am literally choking this out because I'm responding to RFPs that I can't complete. So I need more staff. I need capital to actually hire the right people ahead of doing these projects. And I need to help to really buy out a couple competitors that are in this space that have the market edge based on they're tied with Ferguson's or something like that. And so we are coming in to acquire the company outright and help them grow it and scale it. And so with our connections, we're pushing them forward. I'll tell you, polar opposite, we have another one that I won't say the name because we are a blind pool, but I'll say we have an odorless cleat bag that we're pretty hot on. And they're extremely profitable for only 3 years in business. But the founder's like, right now, we're just doing e commerce and we're only in soccer. We don't know what to do beyond soccer. And so that's like, well, let me make two texts and I can get you into the NHL and I can get you into, the MLB right now. Let's get those odorless cleat bags into other things besides just soccer. And so we'll help them scale. And so we're putting our capital work and our operational expertise to work to help them kind of really develop outsized returns and put them on a position where they can either exit or hold for however long possible.
So that's a good example for this question, I think, is when you hear about something like that, one would hope that the margins are huge on an item like that. Is the competitive nature of getting a deal with MLB to provide the bags, for example, do you get retraded and compressed, and by the time you're done, there's nothing left in that attractive margin?
What's so funny is margins are pretty rich in sport, at least depending on which vertical you go into. So, for instance, media and broadcasting, very lucrative. You go down to CPG products, you have to buy a lot of merchandise ahead, so that's not as profitable, but the volumes are there, right? So it's different depending on which vertical you're in. The funny thing is, again, I'm talking about we can place people in the NFL, NHL, but the reality is it has the sex appeal to it. But frankly, it's not where people want to be. If you're an emerging company, and I think somebody in the chat here,
Horses.
yeah, said, and looking at like youth sports,
Yeah.
I mean, that's huge. If you can cater to the soccer moms and dads, if you can get it out to a Dick's Sporting Goods, if you can get things at that lower level, you can have much higher returns and you're competing for shelf space instead of attention. Attention comes with a price tag. The shelf space is more so aligning yourself with the nature of whoever you're selling it to, and then also the retailer that's going to push it out.
Yeah. Youth sports is like people who love their pets. They'll find the last dollar to get Johnny a new bat and hat, right?
That's 100% right. That's
Yeah.
100%. Yeah.
Which is, not, I'm not being critical. It's just, I think it's a reality.
Yeah.
Yeah. So how about sports, uh, the big sports teams like the NFL? They have their uh, uh, player groups. I'm struggling to find, but the groups within the team that represent the players. So the players, among other things, have bargaining power, but also have, keep people from losing everything and give them some training on money and that sort of thing. Is that helpful to you?
You know, it's helpful because they are providing a service. But the Players Association and others are also generally not run by players. And so there is also a layer of bureaucracy there that doesn't get necessarily to the level of athletes transitioning out of sport. If you are literally transition, unless you pay attention and are there and taking advantage of the resources while you are an athlete, when you walk into a coach's office and you're packing your bags of 5 minutes afterwards, it's all gone.
Yeah.
Your FA's gone, your agent's gone, it's all gone. So
Mhm.
unless you took it very seriously before, that transition out of sport is literally an abrupt end. So, and it's true for my sport, for colleague sports, it's just done. Like when you hang up the gloves, that's the end of the story.
Yeah.
So, I think what we're trying to do, and part of obviously what we have at CVP is we have an RIA, and we drive revenue by way of our operations. And that RIA, we go out and provide educational services. So right now we're talking with the NFL, NHL, other large organizations that are governing bodies so that we can go in there and talk to them about financial literacy, wealth creation, and not even for the fact of, investing in our platform, but more so just exposing them to what's out there. How do you look at a 401? Alts, how do you look at this for wealth creation? How do you not go broke, right? Like all of that is a service that we provide.
Yeah. So let's talk about how you went from this thesis to actually you built a holdco, and then what was the impetus and design to go into the integral fund part of it? Um,
Yeah,
so
really good question.
yeah,
So, we when we started looking at this, so Marcus, myself, my other partner Jeff, who I mentioned, we really looked at this to say, all right, if we have to make this retail investor friendly, if we have to do all these things, we have to do a different model. And so, frankly, we really looked at what Berkshire Hathaway did. And that's honestly as close to a model as we get, except for where Berkshire goes in there and is an insurance company and they create float, right? The float's between premiums, and then when payout, they take that money, they invest it. Literally the exact same concept, except we do it from operations. So because we know the business of sport, we have an RIA that we are able to place with financial education, financial literacy, be a financial advisors, have AUM fees, and then we also have a management code that allows us to come alongside portfolio companies, sports assets, and actually help them improve operations. Both of those are revenue generating machines. Those revenue generating machines are owned by the holdco so that the profits flip to holdco and we're able to reinvest them. How we reinvest them is I think one of the most interesting pieces of our ecosystem is again, we couldn't do just a normal fund and we had to cater to the accredited and non-accredited investor alike. So we chose an interval fund, which is a 40 Act fund for people that aren't familiar. The way
mutual
that
fund. Yeah. Yep.
Yep, it's an evergreen ecosystem, so it can grow up to a billion, 2 billion, 5 billion assets under management and beyond. There's literally no cap. And what we did is we basically said we're going to have our holdco own all of the Class A shares, just like Berkshire, own all of the Class A shares. So we're the sole LP in the interval fund for the Class A shares that provide dividends. Those dividends again come up, create float, and we can reinvest. Class B shares, we're opening completely to the public, to the retail investors. So we're catering as basically like a GP stakes into this firm. So you own the RIA, you own the management company, and you own all the Class A stock in the interval fund. And then the interval fund Class B shares are open to the public. And so we can grow that literally evergreen to perpetuity. And the nice thing about interval fund, again, same thing as I've already highlighted, we're investing in growth stage sports assets. We're going up and down the entire sports asset value chain. The liquidity periods are super interesting because what interval fund specializes in either quarterly or semi-annually redemption periods. So you can redeem up to 5% of the entire aggregate fund. And then, so for instance, if somebody, let's say, has $10 million dollar per share inside of our holdco or inside of the interval fund, they can say, man, I want to liquidate my position. So long as it's under that 5% cap and it's kind of first come, first serve, they can change their entire position. So
Which
let's say,
requires you to have liquidity on hand.
correct. And so not only do we provide liquidity from redemption period and stock buyback, but then we have a secondaries ATS that's layered over the top. So people can trade peer to peer on demand anytime. So it makes it so that this is a very liquid, illiquid machine, which is very rare.
Yeah, it's really, I saw a trend among family offices about 5 years ago where everybody wanted to be a accredited private investor in private offerings because that's where the action was. And then I saw a lot of people just investing in mutual funds simply because it was liquid.
That's
And at
right.
any point in time, they could just, the liquidity in the Vanguard mutual fund is, somewhat different than liquidity in this for the reasons that you just talked about. But it was the same ideas that, wait a minute, if I've got stay rich money and I just want to make sure that it's safe and I don't have principal, I can see what's happening NAV wise. It was a very comfortable thing for even really uh, well-moneyed family offices had, right? So, uh, and this arguably m makes it so somebody who's got 25,000 is a sports fan can just write a check into the I don't know what the status is now. Can they write a $25,000 check into the whole co? And then at what point do you say, okay, now you can go to the B shares into the fund?
Yep. So right now there is still meat on the bone left for people to come into the holdco. And yes, that is a 25K check to play there, have to be accredited investors. Once the interval fund is live, people can buy into the class B shares at literally only $500. So the great thing is we can tell people, you can invest alongside the greatest names in sports. And having this alts for all really makes it so that we're providing access. We're providing access to outsized returns, access to the sports asset class, access to meaningful ownership in sports.
And part of what you said earlier, I think, is going to allow you to meet your short-term timeframes, meaning a lot of these people, only have so many years, is
That's
that
right.
you're not investing in a startup that, you're going to flush 90% of them. You're investing in growth stage companies that demonstrate revenue.
That's right. So, like, real case scenario, let's say somebody right now, because it's $1 per share in the holdco, let's say somebody has $1 million in. That $1 million, they can, again, buy, sell, and trade on demand on the NAV. So let's say the NAV increases because our goal is to have $1 billion assets under management by the end of 2026. When that happens, let's say it goes from $1 per share, we'll just stab in the dark, to $4 a share. You went from having $1 million to $4 million. You can cash out all of it. You can cash out some of it, like you're playing with house money. You can literally change those shares on demand based on if you're going peer to peer or redemption period. So making that again for the athlete who, let's say they got injured and they're like, I got to liquidate half what I can, but I don't want to liquidate things over here that are going to cause major taxable events
Right.
or my retirement money. They can say, man, I had $1 million in here that matured to 2 million, 3 million. They can take out the top of it so that they have 2 million cash and leave the principal in to keep accruing.
Yeah, so going back to your example about Berkshire Hathaway, one of the things that is well known that they were able to do with the insurance company is when they wanted to increase their balance sheet, they just lowered rates. When they wanted to tighten up their balance sheets, they increased rates.
Yep.
Is there a mechanism in this construct that's similar to that with the
It is because
operating incomes, right? Are you saying, right?
it is because of the operating incomes and being an RIA, you could shift AUM fees and you're able to deliver a difference. So that's exactly how we're able to do it. So in fact, um, I can see if I can share something right now so that everybody can see it. Let me let me share my screen and let me know if everybody can see it here.
Yeah,
Cool. Let me move things around. Bear with me, and let me go
take
into
your time.
presentation mode so it's bigger. So I'm sure this is probably hard to see otherwise.
Actually, it's not too bad. I mean, you're in the
There we go.
there you go. That's perfect. Yeah.
Perfect. So we have our RIA firm that builds and controls the funnel. So think about having thousands of individuals continually come into year after year into our funnel, where they're being exposed to all of these different ways to invest. Then we're obviously billing them based on AUM fees, right? Based on what they have kind of with our RIA firm. We have our management co. That's protecting the principal, accelerating company growth, and developing new business ideas. So we have individuals in here that are going to help us continue to grow operations. All of that, because we own it, comes back into float that we can reinvest. So it comes in the holdco. From there, we basically make strategic investments, which is the sports interval fund, and then we have direct holdings that are sports adjacent. Because for This is getting deep into how the sausage is made, but for interval funds are limited to the total amount of equity you can hold in any one asset. So on
It
that
has to be
case,
well diversified, right? Yeah.
exactly. So then we have our own kind of holding on the side.
Yeah.
Anything that produces revenue for us, because keep in mind, we own all of the Class A shares. Those are the only ones that produce distributions, come right back up to the holdco that we can reinvest in now Class B shares. So we constantly have this exits and basically a drip setup where it continually reinvests so that we can keep this as an evergreen fund. And so as this goes to a billion, 4 billion assets under management, if people are in the holdco, they're in the GP stakes entity. So here, our RIA firm, that's hard to say,
It is.
is the one that runs the sports interval fund. So we charge 2.5% interest, no carry. Can't charge carry when you have retail investors
Right.
involved in a fund. So right here, it's 2.5% interest. So on a $1 billion fund, that's 25 million. Where does that go? It goes right back up to the holdco. We reinvest it. So it's a constant pool that sits here that allows stock appreciation on the NAV into our holdco and compounds over and over and over.
So you purposely said interest as opposed to basis points, right?
Yes. And the
So,
reason being is because this is done on a 2.5% based on the total net asset value of the fund. So if let's say we have a billion liquid, but the NAV is at 4, we're taking our fees off of the 4.
yeah. And the valuations, I don't know how it works in mutual funds to value the holdings, because oftentimes mutual funds are known for buying public equities that it's easy to determine what the value is. So
Right.
how do you determine the value of the holdings?
So this is actually a good point to maybe take a step back and talk a little bit about the team too, because I think it's important. So in our entire firm, so right now on the voting side of Holdco, we have myself, Jeff, and Marcus that I've already talked about. Obviously, you've heard my background. Marcus, post sport, went to get his series and as a financial advisor, has specialized working in the finance industry. Our other partner, Jeff, has been a GP and also has opened up a school to help emerging managers and teach them how to be a fiduciary. So, from our experience, we're good operators. We know how to bring the right people into the room and teach them and get them going. So, we've hired the best operators to make this happen. In the management co, we have a gentleman in there who he worked at a Fortune 50 company and he did over 40 different investments with them that are scaling and still active today and ran their incubator. We have a gentleman who is the founder of Amazon Alexa and literally Bezos' right hand on that. We have another gentleman who ran the front office and back office of MLS and NFL. We also have a gal named Alexa. She's actually head of the third largest private marketing agency at the company, and she's our CMO. If you take that one step higher and go to the RIA firm, we actually have partnered with a group. I can't name drop them today, but I'll tell you they are extremely seasoned veterans in the sports and investment lanes. And those individuals are coming right alongside us to run this, as well as we have financial advisors that we're tagging in for the operation side. Now, if we then go over, so kind of to your point, where the 40 Act and pieces work. So we have a group called Sweater. Sweater is a phenomenal group that manages 40 Act funds. That is the entire thing they do. And a gentleman by the name of Jesse Randall, who is the founder of that, is one of the smartest human beings I've ever met on this. So Sweater is our host of the interval fund and basically the fiduciary of that. We then, of course, have our transfer agent, bank, everything underneath that. But we are under strict SEC guidelines to roll all that forward. So, what we've created is basically have it so that we have a group also called Templum who hosts our secondaries ATS. So we brought in the best of the best alongside us to run this. So circling all the way back to kind of the question is we've aligned with Sweater and aligned with all these so that we can maximize our returns and have, frankly, a very high level of scrutiny because we want that. Being that this is public, we want people to look under the hood. We want people to ask questions. And so it's exciting that we have it all built that way.
Yeah, and let's face it, the mutual fund construct has been one of the most transparent constructs in the entire financial services business. I
That's
mean,
right.
you can't hide anything, right?
That's right. Yep. And so I think that's the nice thing about this is everything in the interval fund, everybody can see it's public. Now, obviously, as the holdco, this is the beautiful thing about this is now we're able to cater to the accredited investors, and this becomes a blind pool so that as we're investing in things, obviously it goes public once we invest, but nobody knows the LPs that are in here. No, it's private, so it makes it a lot easier to contain when you have very well-known athletes in here. It makes it a lot easier to protect things for them.
So on the registered investment advisor, the revenues are being generated by some of these people coming in and you're managing their money and getting AUM fees, right?
Correct. And also charging groups to do speaking engagements or speak about financial literacy and provide a platform for them to learn on. So all of that we monetize.
Yeah. Super interesting. Yeah. Very cool. So let's talk about what the opportunity is, how much is left, what's open.
Yeah. So what's open right now? We have, well, I'll even start back with the structure. So it's a C Corp right now. I don't remember if it's in that past document. We're a Delaware C Corp is the holding company. Right now, we have exactly 8.1 left. Full disclosure, we have LOIs out for quite a bit of that, but it's kind of the first come, first serve. We all know how this works, and it's kind of an exciting asset class. 8.1 left, dollar per share buys into the holdco. And then from there, we're just going to keep growing.
So what do you think when you launch the Integral Fund, when do you think that'll be?
So right now we're kind of on our down period with the SEC and filings. I think everything is going to go live January, which means we're going to do the grand unveiling at Super Bowl. So as you can imagine, Marcus and team in the New Orleans Saints Super Bowl in New Orleans, we're going to get very loud about it, and so
Yeah.
that'll be kind of the grand unveiling when this will be live.
So it's really interesting that there were going to be people that, I mean, just think of a stadium full of people if they knew that this was available and they could invest in, something they're really passionate about. I could see that Class B shares could just, obviously with some marketing, you know,
And
fuel.
we control the digital wallet to which they invest through as well. So we
And
own the investment vehicle, and then they can invest through it.
super cool.
Yeah.
So for the group, I did, just so everybody knows, I also think that Sweater's super smart guy. Thanks for the introduction. Had a nice conversation with him. Does he help? Does the Sweater help with the filings, or are they just doing the back ends?
They do basically all of the management itself, and they help with some of the placements, but really our charge in that is going to be the specificity of the thesis and looking at we're going to deploy into this company. Here's where we're taking capital from. They're going to do all the back house.
And for the group, I mean, Sweater always already has a bunch of money in doing this with, for example, what they're doing with you, with others as well, right? So they've got a pretty well-honed machine there.
They do. They have from everything from their chief compliance officer down to the folks that are looking at with the SEC management. I've known quite a few people in this industry. I haven't met anybody better or that knows more about 40X.
So do you need to be, I'm sorry to get in the weeds a little bit, but it's fascinating, right?
Yeah.
You have a registered investment advisor. Do you need a broker dealer as well?
We can, not needed, but we absolutely can, which we will have.
Yeah,
So another place for operational efficiencies and revenue.
that sort of thing. Yeah. Super interesting. So let's go one step beyond this. Is it the uh, primary objective then, once all this is to pull a trigger on all this, is to grow the Class B shares? Because
Yeah, so
the door's going to close on the holding company shares, right?
the door is going to close on the holding company shares. Full disclosure, what we're going to be doing after that is we're going to be continuing on for 500 million into the holdco via convertible debt note. That will be a 10 million minimum check size coming in, 3-year term, and then obviously details to follow after we file them. But everything that we're doing, that's going to come into the holdco. And again, it's reinvesting into different share types and keeping it through the funnel and then putting it into the different companies that we have, the RIA and the management co. So our goal is absolutely going to be growing the Class B shares. The Class B shares literally can go to, again, $1 billion assets under management and beyond. So we truly believe that we will have in hand by the end of 2026, a billion assets under management.
Yeah. Is the investment in the holdco post? Well, let's give the group the benefit of knowing that there's already a bunch of money that exists that you guys have performed well on and raised, right? Like there was up to $100 million, I think, right?
Yeah, we started off, the C Corp was a dollar per share, 100 million shares. Now, full disclosure, just because I don't want to mislead,
Yeah.
we've obviously done everything from stock swaps, acquiring assets and pieces in there so that we're not just taking straight capital. But yes, it's the holdco itself already is at about 92 million in valuation, or I'm sorry, not in valuation, just total assets already.
Yeah. And the registered investment advisor is up and running and assets under management and
AUM hasn't kicked in yet. We're actually
yeah.
kicking off contracts in January, but we have all of these. All they're all assembled. So the great thing is each one of those things I showed is already active, already filed, already assembled, already owned by CVP. So we've done all the legwork, have deployed. So it's not a here's what we're going to do. It's no, it's done. Just watch it go live.
Yeah. So I asked this earlier, if you don't mind, we can repeat it for somebody in the group here. How do you value the private companies so
Ah,
you get to the NAV?
yes. Sorry, I see these now. I can go
Yeah.
into the chat too.
Yeah.
Good question, George. So well, short answer is we don't. So we do a third party. It's done by outside sources so that this is done properly and above board. It's done on a 409A valuation. That two answers is that number one, it actually is done. The NAV is calculated at midnight every night, rolls over. So there are going to be ebb and flows, as you can imagine, just like a mutual fund or anything else. But then at the redemption periods, there are obviously check-ins where we look at where companies are valued, both at the individual company level as well as the fund itself. So it's a very high level of scrutiny, and again, it's third party. We're not going to do it.
Yeah.
I think it'd be pretty nefarious if we did it internally.
Yeah. Self-regulatory often gets
Yeah,
dicey.
yeah.
Yeah.
And then you also asked getting the liquidity financing for redemption. So good question. Right now, we aren't looking necessarily at financing it. There's a couple different ways to do it, and depending on the markets, it can be either cash on hand, and we're putting them into different assets than we can pull out and liquidate, as well as we're probably not going to go for a credit facility for it.
Are you going to be in a position at some point where you just have, you know, a bucket of cash on those redemption periods?
I mean, short answer is yes, because you need to have that on hand. Long answer is we're never going to let the capital sit. So it needs to be
Right.
appreciating and growing on the NAV. So it's going to be working.
Yeah. Super interesting.
Yeah.
Yeah. All right. So timing wise on the 8th, it's open. Just you're gonna launch in February, the Super Bowl. So you want to wrap things up by the end of November, end of December.
Yeah. I never like to oversell, but there really is kind of a ticking clock here, and you're kind of under the gun just for sheer factor. We do have LOIs out. There is a high probability that a lot of them might close. I would say we will be done by probably the second week of December at the latest.
Yeah. All right. So for the group, if you're interested, we'll make sure everybody gets in touch. And then
Absolutely.
and then we haven't scheduled it yet, but we're going to be speaking to Nick again and get a little further into the weeds. If you're interested, we'll let everybody know. And if there's anybody in the group that wants uh, uh, an invitation for some of their colleagues, you're most welcome to do that. We'll make sure you get that as well. I'm super
Yeah.
excited for you.
Thank you. I
Yeah.
appreciate it. Yeah. And I,
Yeah.
I love comments, questions. You can find me on LinkedIn and reach out, ask questions. I'm always an open book.
Yeah. We'll make sure we get everybody in touch with you. Nick, that
Great.
was great. Super appreciate it. Excited
Thank
to
you so
be
much. Appreciate it, Arthur. Thank you.
excited to be part of it. Thanks. Okay.
Take care, everybody.
Bye-bye.